All right, guys, back to work. Break time is over. We got one more day left this week. We've had a great week so far. Let's finish strong tomorrow. Boy, choppy markets today, right? Really choppy after that big move down that we saw yesterday. Usually choppy markets that we saw today means something big is coming tomorrow. So I'm pretty excited for Friday's trading session. And boy, I have a ton of great trades I'm tracking for tomorrow. I'm going to go over my favorite trades in the video for you guys tonight. That we have a game plan to make some money on Friday. Before we jump in though and talk about my favorite trades for tomorrow, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy these videos tonight, do me a favor as always, hit that like button for me. Give me a shout out down in the comment section below. Either way, thank you so much for tuning in, supporting the channel. But enough of the intro. Friday is not going to trade itself. And I'll tell you, we definitely have some great trades to look forward to tomorrow because all that choppy market we saw today, that definitely smells like something big could potentially be coming here for tomorrow. Let's start off on the 60-minute time frame on both the Nasdaq and the E-mini. Remember the 60-minute chart, I like to use this to plan my trades the following day. And then later on in the video, I'm going to drill down to some tick charts, some faster time frames, tick chart to make the timing, the entries a whole lot easier. What does the 60-minute chart tell us right now? Well, as we've been talking about all week, we had those big moves up into trading ranges on both the S&P and the Nasdaq last week. The buyers are still trying to squeeze this thing and run this thing back up into those trading ranges. And the big clue right now is there's a lot of bearish momentum. So buyers, if they're smart for tomorrow, they'll try to trap in those sellers, use their stops, squeeze their stops for a potential squeeze going back up into that trading range. We also have some big news coming from China overnight, so I will talk about if things continue to melt down as well. But right now, though, the buyers are trying to go back up into that range overhead, and the goal tonight will be to plan ways to squeeze the sellers, to use their stops as fuel to turn this bearish pullback into a beautiful reversal back up into those trading ranges. And of course, I'm going to cover my favorite trades to capitalize on that as we go deeper into the video here tonight. Now, before we jump into the tick charts though, before we drill down and talk about entry tactics for tomorrow, let's just make sure we're all on the same page. For tomorrow, we don't have any major news tomorrow during the morning session. We do have some Chinese inflation data coming out tomorrow night, which will impact the weekend into next Monday morning. So be aware of that. The most important thing, though, that you want to be aware of for tomorrow is a Friday. I always have a very specific mindset on a Friday. Early in and let it run. Early in, which means find trades early in the session and let it run. I always try to leave a little piece of the position open on a Friday morning, into lunch, into the afternoon, because one thing about Fridays, they get a bit lower volume, they get a bit illiquid as we go into lunchtime in the afternoon, and you guys probably know this already. Fridays love to make these low volume moves. So remember, the mindset on a Friday, early in and let it run. Leave a small piece of the position, and hopefully we'll put ourselves into some good trades tomorrow morning and then have a chance to leave those little pieces to run potentially all the way back up into that range here tomorrow afternoon. Now, back to our charts though. It's good to know the mindset of a Friday, but the money is made on the charts. Let's now go over my favorite trades here. We'll go the E-mini and the SPY first, and we'll wrap tonight up on the Nasdaq and the QQQs. On the E-mini and the SPY chart right now, as I mentioned in the introduction, we're bullish into a trading range. We're looking for ways to buy the dip and go back up into that range. But again, a lot of bearish momentum. Stubborn bears right now, not letting our signals run back up into this area. So the name of the game for tomorrow is trap in those sellers, right? Trap those bears in and use their stops for that squeeze. And again, we'll talk about the price continues to grind lower here as well. Let's drill down now to those tick charts, right? Because the tick charts, well, the tick charts make everything easier. We use tick charts every morning in our trade room. This is a 7,000 tick chart. You can see time frames in the upper left-hand corner. If you're watching for the first time right now, that is the 21 EMA, the exponential moving average. That is the most important indicator we use every morning in our members trade room. The most important thing right now on the E-mini or the SPY is that we have a bullish move into a trading range. anytime I see a bull market like this, or at least short-term bullish on the tick chart, anytime we see a bull market like this into a trading range, there are two specific scenarios I want to be prepared for. The first one is a breakout pullback. Now, on a breakout pullback, there are many ways to make money. I can trade during the breakout, I can short during the pullback, and my favorite out of all of them is the breakout pullback for the run higher. So 3 different ways, both long and short, on a breakout pullback, especially off that high from yesterday. I'm going to break down how to time the perfect entry on all 3 of those aspects to a breakout pullback. I'm going to cover that as we go deeper in the video here tonight. My favorite trade, though, for tomorrow is definitely going to be the second option, which is the fake-out breakout. We know we have all this bearish momentum, right, last couple days here, and so it would make perfect sense for the bears to come in and try to run this thing lower. The second way we like to trade a bullish range is a fake-out breakout off the lows. I'll tell you right now, this fake-out breakout, that fake-out breakout could easily be the trigger for that big short squeeze we've all been waiting for here this week. There are 3 different ways to time an entry on a fake-out breakout. I'm going to make sure you don't miss the entry on that here tomorrow. So where do we start here right now? Let's start off on the breakout pullback. I'll make you wait for the good stuff later on in the video for that fake-out breakout as we go lower. Let's talk about those 3 patterns, those 3 ways to trade a breakout pullback. As we're going higher, my concern is I don't want to buy too high. In my free trading classes, I talk about the best pattern entry to avoid buying high is a bear trap. It's a very simple entry pattern. It's a strong run up, it's a higher high in price, and a trap below that low. Now, once I get up into overhead resistance, now I don't want to be buying anymore, right? This is where our initial targets will be on that initial breakout trap. At this point, professionals are taking profit and rookies will likely come in and try buying high. In this situation, we're going to use a combination of a failure pattern and a trap pattern. It's called a crown reversal. If you guys are taking my free trading classes, again, this will wrap together 2 of those core patterns. One's called failures. This would be a 2-try failure, and a trap pattern. It will be a bull trap for that move going back down again. Again, this was a little bit more advanced, but again, if you're taking my free classes right now, imagine buyers trying once, buyers trying twice, right? That we can use their stops to fuel that move going lower, right? It's the benefit of a failure pattern. And then again, a bull trap above that high. It's a lower low in price, and that trap high. We call these crown reversals in our trade room, and they are the best way in a bullish move like this to time the entry going lower. Now we have 2 out of the 3 patterns on that breakout pullback. What's the third one? Breakout pullback style. Let's move the moving average coming down now. Now think about what's happening right now. Trend lines coming up. Trend lines coming up. Prior range high acting as support. Let's hope now we can get back around the highs of that range here, right? Back around the highs of that range there and trap in some of the bears. This is one of my favorite trades in a range-bound breakout. Hopefully the bears will come in, try to sell this thing short, and we can use a classic failure into pullback combination. We talk a lot about these combination setups in our trade room, and of course you guys are learning these in the free trading course, right? Get underneath that 21 moving average. Remember where we are right now, right? Bullish overall move at support, right? Beautiful place to trap in those sellers, use their stops as fuel for that run going higher, and then don't forget, we almost always get that first pullback after that failure. They fail off the moving average, they pull back, and they try to go. So keep an eye out for that failure into pullback combo. Now remember, I teach all of these patterns. I teach the traps, the crown reversals, the failure into pullbacks. I teach all of these setups in our free trading classes. I'll tell you right now, if you haven't taken that free course yet, if you're not making the money you want in these markets, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, take that free trading course, because I'll tell you, the strategy I teach in that short video series will teach you a stupidly simple trick that we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. And most importantly, I'll teach you my 4 favorite entry patterns: traps, crown reversals, failure patterns. That way you can start making money on whatever market you want to apply to on your own out there. If you're tired of missing the best trades each day, what are you waiting for? Grab that link that popped up, take that free course, and if you can't get the link up there, I'll put all the important links down in the description of the YouTube video. So if you can't get the pop-up for some reason, I'll put all the important stuff down there. That way you can learn all these setups, and the next time you see a range like this, you'll know to look for, what was it again? On the way up, we don't want to buy high, we want to buy low with that trap. As we make our way into overhead resistance, we don't buy high, right? We're now anticipating that breakout pullback I mentioned earlier. We don't buy high, right? And we don't just pick the top, right? We don't sell the top. We wait for the rookies to come in, let them dig their own grave out there, and we use that crown reversal pattern. Again, wrap together. Buyers try once, buyers try twice. That way their stops are sitting right there to be juiced for that run going lower. And the beautiful entry is that bull trap. We need that bull trap because that momentum, right, is so strong in that scenario. And then once we end up back around, again, think about it, right? Trend line, channel off that low, prior swings off that right. Perfect spot here for a bear trap as well. I call it a bear trap, but again, I'll wait for price to pull back. I'll wait for the bears to get short. Remember, we're not trying to pick bottoms, okay? This could easily collapse back down again, right? We're not picking bottoms, and I will talk about how to buy that low here in a moment. So give me a few moments to finish up the idea here. But once those bears come in, once they get sucked in below the moving average, bingo, now we know where their pain is. Now we know where their stops are. All of that bullishness now, we're going to want to retest that high, that failure into pullback combination. I'm getting excited right now just talking about it. There's one more variation I want to talk about before we go into what I hope we get tomorrow. You know, I don't know what's going to happen tomorrow, right? So my job right now is to go over some game plans. That way I have it all kind of ironed out, and also too, right, you can benefit from the game plan tomorrow as well. A pop and grind breakout. Okay, pop and grind breakout. So on the 60-minute chart, we are only one bear trap away from squeezing this thing right back up. And tomorrow's a Friday. Friday afternoons will be the perfect time for a squeeze going higher here. Now, what if we pop up here and begin to grind going higher? I call these pop and grinds, right? Pop and grinds. My students always say it's our favorite dance move in our members trade room. But all kidding aside though, right? If something happens overnight, right? Or if we were to fake out breakout and then pop up like that, right? Again, and I'll talk about this in a moment, right? One of those entries down there will be a fake out breakout off of that low. But if at any point we jump higher and begin to grind and grind and grind, this is usually what happens when a market squeezes. Okay, if the bears get smoked, if the market pops up and starts grinding higher here, we don't chase it. That's one of the most important things. We don't chase it, because what's going to happen is you'll be waiting for that trap. You'll be waiting for that chance to buy low. You won't get that chance to buy low, and this thing will drive you nuts sometimes. And right when you say, oh, heck with it, I'm getting in, that's usually when it pulls back, and you want to wait for, watch closely here, draw that trend line off the high, mark it down off that low, and all I do is look left, find some prior swings, and look for a trap below a prior swing, get below the moving average, look for that failure below the 21 EMA, failure into pullback, failure into strength or trap setup. Again, if you guys are taking that free class I mentioned earlier, this will all make a lot of sense here. One thing about the pop and grind, right? One thing you want to keep in mind, if it pops up, keep track of the size of that first leg. Okay, the first leg is the measuring leg. First leg of a breakout is always the measuring leg. Okay, I'm always talking about this in our trade room. If you want to make more money, don't trade more often. Don't trade more markets. Don't trade more patterns. Get better at making more money on your best trades. All right. So if you know how big the first leg is, that will then tell you how big that third leg will be, and that will help you squeeze a little bit more of money out of that trade. A very good example, leave that runner, right? Early in, let it run. Early in, let it run on a Friday morning into Friday afternoon. So again, if it rips higher and begins to grind, it's a sign of a squeeze happening. Don't chase it. Right when that little voice in your head says, get in, tell that voice to quiet down, mark those swings, wait for that pullback, and don't miss that first test off the low of that channel. First leg, third leg, that'll help you squeeze out a little more profit as we go here. So now we've got some good ways to make money on this, both the long side and the short side if we go higher. Now let's get down to business here. I think everybody, at least everybody we work with here in our trade room, everybody's hoping for that pullback and that retest of that low, because a bear trap down here, a fake out breakout, could easily trigger a squeeze here for tomorrow. Let's keep moving here. How about some Nasdaq? Nasdaq and the S&P are very, very similar. You'll notice in the Nasdaq right now, we had that very big melt-up market last week into the holiday weekend. We turned sideways into a trading range. Ranges act like magnets, and with a bull bias like this, we know that support levels. Buyers are trying to buy into this and run back up into that trading range. The challenge we have right now, though, is we heard from China overnight, right? What did they do? They banned the iPhone, right, in pretty much everywhere, and so that, of course, caused kind of a kick in the gut, a punch in the gut for the Nasdaq. Going to drag things lower today. That's giving us a lot of bearish sentiment right now, and the key to making money on the long side tomorrow is to use that bearish sentiment, use those bears against themselves, right? Use their stops to fuel this move. Most important factor on the Nasdaq right now, almost identical, almost the same situation. It's not as obvious as the S&P, but kind of a pop up there, a slow grind move right into what is basically a trading range. And so ultimately the exact same game plan I mentioned on the S&P can be applied on the Nasdaq, right? It'll be traps on the way up, right? It'll be that crown reversal on the pullback. It's that seller failure with that breakout pullback, right? And then that run back up to retest the high. Or if they pop up and begin to grind, you got it, right? Find those new big channels and grab that first test off of that low. That's the easy part. Now let's talk about if we go lower. One very obvious difference on the Nasdaq to the S&P is the Nasdaq still has not retested that big low that we saw, kind of that sucker punch the Nasdaq had overnight when the news came out that China was banning iPhones in government agencies and state-run companies, which is almost everything, right? So anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that level. So right now, and again, you can see for yourself on the 60-minute time frame, that's a lot of momentum going lower right now. So a move down, it has to be something prepared for here tomorrow. Now, they may go lower initially, or we may end up popping up, crown reversaling, right, and then back down again, right? There may be a fake out breakout off that high as well. There are, let's see, 3 different ways to buy the fake out breakout. And again, this is my favorite my favorite place here for a trade tomorrow. You'll notice we have this channel coming up. All right. Now, inside my trade room, we always talk about whenever you're buying high, we look for traps, right? So if as I mentioned earlier, if we're going higher here, I want to buy as low as I possibly can with the trap. Same idea down here, right? The first one, and definitely not the most desirable of the group, but the first thing we'll keep an eye on for tomorrow is if we end up rolling lower here, and we got that trend line for the channel, prior swings here, this is going to be seen as being buying relatively high, right? I'd like to buy off that low. We may not get there. Okay, we may not get down to that low or even close to it. If we get down to the low of that channel, if we pull back, get underneath ideally that 233 level on the NASDAQ, it's a similar level, of course, on the S&P as well. If we get down to that low of that channel, get underneath some prior swings, this is where I want to be a buyer here because, again, I'm kind of a bullish overall here right now, but I got to be careful here, right? Because the odds of them trying to run this thing back to retest the low are a little bit too high that I'm comfortable with. I also don't want to buy too close to this trading range. So what we do is we let bears try once, we let them try twice, and we go for traps, okay? Now, this pattern may come in a couple different shapes and sizes, but the reality is if we don't get down below this level or this level, I want to look for traps because I want to make sure I'm buying as low as I can. It may run lower. We may pull back. The bears get short once and then rip higher. If that happens, I'm still looking for some way to buy underneath that prior swing. Look at how this pattern sets up. It's a higher high in price and that trap below that low. Inside the free trading course, we talk about the right signal candle, making sure it closes convincingly strong above the 21 moving average. You guys will learn that in the video course. And again, at this point here, targets will be top of that channel and absolutely let those things run to the high of day, or I guess I would say that bounce level, almost the high of day here for today. So shallow pullback, right? Shallow pullback traps because we want to buy as low as we can. Now, the more desirable trade here would be to get below something like this, that 97.5 level. If I can get underneath that 97.5 level, now we can come in. We're not so worried anymore about those sellers. We're not so worried about buying too high anymore, right? Now our risk and reward ratio is much better for us now. So now I don't need that trap, but I do still want to get those bears committed and use their stops as fuel for a failure into pullback combination, right? Failure pattern below the moving average. Let those bears try a couple times, right? Rope them in and use their stops as fuel. And then again, into that pullback combination as we go. A lot of times, these fake out breakouts, what they'll do is they'll pop up and run, and you get a nice, beautiful bear trap as we go higher like that. Oftentimes, it'll pull over like that, right? So the pullback will actually be a bit of a trap setup. I know I talk about traps, right? Traps are my favorite way to make money in the markets. And so, again, get below the moving average, get down to support. We're not picking the bottom, right? We're not picking the bottom down here. We're trapping those sellers in, using their stops as fuel. And then, of course, as we start to run higher, we know where the market wants to go and wants to go back and retest that high. Great spot for a half-off target. Great spot for a runner target, right, as we keep going higher. I like that one a lot. My favorite out of all of them will be the run back down to retest the low. We talked about this last night quite a bit on the video last night. Anytime we see a double bottom, right, these are always going to be my favorite way to buy in an overall kind of bear market right now on the 60-minute. If we do end up going lower, momentum, if we do end up back to that low a day, momentum becomes very concerning, right? A lot of bearish momentum there. So again, we're not going to pick the bottom. We're going to let these bears try once, try twice. Remember, sellers want to sell high, right? So let them try once, go higher, let them try twice, right? You always want that to try at a higher price. That will commit more bears into the market and will give you some stops to use as fuel, right? That's the key here. The key here, if you're trying to pick the bottom on this or turn this thing going higher with bearish momentum right now, we have to use those sellers and use their exits against them, right, to fuel this move going higher. I like this trade a lot because you're buying low, right? This is not where professionals are trading, right? Professional sellers are not selling down here, are they? Those are rookies down there. Okay, that's why I like that trade so much. There's not a lot of pros down there except the buyers, right? Everyone's a buyer right here. Makes sense, right? In these situations, everyone's a buyer. Why? Because anybody who sold short, what are they doing? They're taking their profit here. They're buying their way out, right? The short sellers are buyers. The buyers are buyers because, again, they're buying off the low. And then once we get those rookies with one try, two try, guess what? Even the rookies, when they get stopped out, they become buyers as well. Now, again, a lot of times these double bottoms, what'll happen is it'll really shoot and run higher. And if it does shoot and run higher, keep an eye on this follow-up pattern. What I'll do is I'll draw a trend line off that high, right? And remember, at that point, draw those trend lines off the highs, pin it down now at that low, and don't miss that first test off the low of that channel. Again, some variation of the sequence, that failure into pullback combo off that low could easily trigger that short squeeze we're looking for here tomorrow, right? Targets off back at the high, leave that runner on a Friday afternoon. Could be a very nice way to finish up the week here. One more kind of variation of this would be a V bottom, right? A V bottom. Sometimes what happens is we bounce off that low so strong we don't get the 1, 2. Sometimes it bounces off that low so strong and begins to grind and grind and grind. Remember, right when that voice in your head says, get me in, right? You're going to feel like you're missing it. It'll almost always come back underneath one of these prior swings because buyers are going to be waiting there to buy nice and low. So stay patient for that. Again, we call this kind of V bottoms, right? That V bottom reversal. These can drive you nuts, right? Because you don't really get a chance. Again, I'm not a big fan of picking bottoms, right? Because as we've seen the last couple of days, sometimes they keep on going. Right? So I'm not a big fan of picking the bottoms on this. I would like to trap in the bears and use stops to fuel the move back up. But if we don't get it, if all we get is a V bottom on this and it grinds higher, just remember, right when that voice starts saying, shoot, you're going to miss it, you're probably not going to miss it. Just make sure you wait patiently for that trap or at least some entry right off the low of that channel. And of course, I'll teach you my favorite entry patterns in that free trading course. Now, what if we take out that low and what if it keeps going? Imagine this pattern flipped on its head. Okay, and we saw one of these. Was it yesterday morning? I can't recall. I'll kind of blend together sometimes, isn't it? So if we take out that low, but we don't hold and bounce, right? We don't get that fake out breakout into squeeze going higher. If we keep on rolling, who knows, right? China said something. Who knows what could happen overnight, right? Fed speaker spooked the market. Markets, you can tell right now, are a bit fragile as we transition from the summertime season into the fall season. And we've seen how kind of nervous they are among, with global growth and government shutdown. We heard from Goolsby this afternoon. He was talking about the same thing here. If it pops down and begins to grind down, you know what to do. Draw that trend line off those lows. Now, I should draw this more specifically. I'm not doing it in this area, right? It'll pop down. It will continue to melt below that low here. At that point, think about where that prior low is, right? Draw that trend line down off those lows, up around those highs, and there'll be some variation of this pattern if we continue, right, going lower here. So again, we take out that low. We don't go bears trapped and squeeze back up. Instead, and this will probably be accompanied by some major news event overnight, right? Something will happen. China will do something. The Fed will do something. Something will happen, right? The market will freak out and go, okay, we're going lower still. They'll make that run lower. You won't get that long signal off the low. It'll keep on bleeding lower. And anytime we see those kind of pop and grinds like this, simply draw that trend off the lows, up around the high. And again, any of the entry patterns. Traps, my favorite. Traps, failures, pullback combos, target off to retest the low, right? Half off at that low is what I would do. And again, it's a Friday, right? So early in, leave a runner, right? Leave that runner. And if we're lucky, we'll get that nice big first leg, third leg, that runner going lower here. All right, guys, now you know my favorite trades here for tomorrow. The game plan is set here tonight. Tomorrow, we're going to get together in the morning trade room and trade this stuff together. The best way to learn and trade this stuff is to do it with us every morning in the members trade room, 8 o'clock Eastern time. If you want more information, I would definitely recommend start with the free classes first. That will give you a basic understanding of how the strategy works, the trade room works. I would definitely recommend grab the free class links. I'll put everything in the description of the YouTube video. So grab the free course, get started there, get your feet wet, get your charts going in the right direction, and that'll get you ready to come out and join us and trade with us sometime soon in the morning trade room with all the advanced members. If you got questions, if you need help getting access to any of the information we've talked about so far tonight, don't be a stranger. You can always call the office. Megan and I are always here to help out and answer questions along the way. We got live chat on the lower right-hand corner there as well. So don't be a stranger. If you got questions, we're here to help. In the meantime, I hope you learned a bunch from this video tonight. Excited for tomorrow. Hope you use this strategy to make a killing on Friday. If we don't see you tomorrow morning in the trade room, we'll come back after the weekend and get after it on Monday evening as well. Guys, my name is Joseph. Thank you for tuning in and watching all the way to the end. Be well out there. Be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.